Hello, everyone. My guest today is Mike Preuss. He's the CEO and co-founder of a company called Visible. He's from the Midwest and lives in Chicago, attended Indiana University, and is also an alumni of the Orr Fellowship. He was previously the head of business development for Formspring, based in San Francisco, again, now running Visible.vc. Mike, are you ready to take us to the top?
I am.
All right. So I think you play in kind of the investor update space. Talk to us about what Visible VC is doing and how you make money.
Yeah, so Visible VC is a web software application. We're a SaaS-based business, so recurring revenue is kind of our go-to business model. And customers are really buying our solution to report data, updates, KPIs back to their investors, potential investors, and their team.
And so, look, I'm an LP in a couple funds, and the fund managers will send out, once every 4 or 5 months, kind of an update via email, or the company is, if we invest direct, we'll send an email update. Why is this so much better that they'll start using this versus just sticking with email?
Yeah, I think Skype cut out for a second there, but I think I got the gist of the question. So companies are connecting to accounts they already use to run their business. So whether that's Salesforce, HubSpot, Stripe, Google Analytics, Mixpanel, we integrate with a suite of different applications to automate that reporting process. So rather than pulling data down from your accounting file, from your CRM, from your own database, we automatically consolidate all that data for you. We visualize it in a really professional, beautiful manner. And then we let you send it out, again, like you said, through email. But you can also send it to Slack channels, shareable links, and then we're tracking analytics behind all of that. So you know exactly how all your different investors and stakeholders are engaging with the updates that you're sending. And
imagine someone listening right now, because we have a large audience who are constantly sending investor updates. The first thing that comes to mind is like security, how to make sure the link doesn't get in the wrong hands. So how do you really make sure this stuff stays only to investors?
Yeah, that's a great question. So for us, everything is rendered directly first and foremost in email, and that's kind of our baseline, right? So if you're sending email anyways, people can forward it around. So it's really up to kind of you and your investor and making sure they're good stewards of the data that you're sending with them in terms of the security. But we take privacy really seriously and coach people through that. But it would be no different than if you're sending a pitch deck or a different piece of communication through email and an investor sending that around.
Got it. Okay, interesting. Walk me through some of the other economics here. So on average, what's a customer paying for this?
Yeah, they're paying on average about $150 a month. So any kind of ranges, but our ACV is right about $150 a month.
That's great. And then put this on a timeline for me. When did you launch? What year?
Yeah, so we started in 2014, and we were actually born out of a venture fund. So we built this product internally to kind of solve the problem of getting updates and data from our portfolio companies. From there, we kind of pivoted the model a little over 2 years ago to really focus on companies. We kind of learned through that whole process that investors are a great distribution channel, but we should really focus on a core experience for companies and how they can properly leverage their investors and update them. So we started in 2014. We now have about 2,000 organizations using Visible. Not all of those are paid. But ARR is growing 200% a year, so we're trying to double every year.
Mm-hmm. That's great. How many do you have paying today?
Yeah, it's above 600.
Okay.
So we have roughly a third of our organizations paying to use Visible.
That's great. So you just recently passed $1 million in ARR, something like that?
Yeah.
That's great. Yeah. So 600 times 150 is $90,000 a month. Where were you about a year ago? If you're growing 200% year over year, I mean, obviously it'd be like, what, 30K, something like that?
Yeah, something like that.
Okay. Oh, that's accurate. It was about 30K a year ago per month.
We don't disclose revenue numbers, but right around 30K.
Yeah. No, I'm just going off the data you gave me and then backing into the growth. Okay, good. And then have you done this bootstrapped, or did the fund that you spun out of kind of fund this early on?
Yeah, so a little bit of both. So we've raised a small round of venture capital. So we've raised around $1 million ourselves and have taken a really lean approach to the business in terms of growing it and scaling it. But we definitely raised some capital to hire initial employees, build a product, and continue to invest back into the business.
So total money into the company today is how much?
1.1 million.
Okay. So when you say you took on some early, you're talking like $100,000 really to get stuff going.
Yeah.
I mean, that's great. Nice and lean. And how many folks are you at today in terms of team?
Yeah, so the team's currently 5 full-time folks, and we're hiring for 2 open positions right now, but a full team of 5. We also was just listening to Sid's podcast from GitLab. We're also a distributed team as well.
Yeah, that's great. Yes. What did you think about that episode?
It was awesome. I mean, talk about a company that's scaled incredibly fast. It's easy to fall in love with those metrics.
Yeah, I was still pissed because I flat out asked him, I said, Sid, two questions. Are you selling to anyone right now? And he said, no. And then I said, are you raising right now? And he said, no. Now he smirked a little bit. And sure enough, a month after I do the interview, GitLab raised $100 million. I'm like, this guy, of course he couldn't tell me when we did the interview, but still impressive numbers. Okay, good. So you're 5 people. Where's everyone based?
Yes, we have some folks in Dublin, Chicago, Indianapolis, and hopefully a couple more in Europe coming up soon as well.
So truly fully remote. Okay, great.
Yeah.
And the 2 spots you're hiring for, out of curiosity, what are they?
Yeah, one's a full stack engineer, so development of the application, and demand generation kind of marketer. So one of the things we're trying to figure out is how do we trialers the business. No one at the company right now is a quote unquote kind of professional marketer. We've kind of bootstrapped it and duct taped it ourselves and looking for someone to handle that for us.
Interesting. How sticky is this thing? I mean, what's churn today and how do you keep it low?
Yeah, so churn's under 2.5%. So we keep it pretty low in terms
of churn per month.
That's per year. So we have really low churn.
What is that, logo or revenue?
Revenue.
Revenue churn per year.
And logo and revenue kind of match almost actually. But one of the things that we do pretty well is we're very hands-on with the customer. So if we're seeing a customer's not sending a monthly investor update out or update to their team, we can jump in automatically, provide a hand. But the one risk for our business really, right, is some of our customers are more early stage companies. So that's really our risk when it comes to churn. But once we have a customer sending a one update out and publish it, we have like a 95% chance of landing them as a customer. So that's really our kind of true north KPI, is what percentage of our trialers and then what percentage of our customers are sending out an update every single month. So we can look at cohort data 30, 60, 90 days.
You're trialing folks. I mean, you don't have a free plan, I don't think, but you do have like a timed 14-day trial, it looks like. Is that accurate?
That is correct. Yep.
Okay. And no credit card on the front. So you're basically saying, how do we activate these people in 14 days and then get them to pay?
Yep.
Okay. Interesting. I mean, so what if someone goes, hey, listen, like a month is 30 days. I only get this for 14 days. Our investor update doesn't go out until the end of the month. So our trial is going to end.
Yeah, that's a great question. So we're pretty flexible when it comes to trial lengths in terms of like extending trials. But one of the things we ask you when you sign up for Visible is, when do you want to send your next investor update out? And then we kind of do back of the envelope math there and know how to reach out to you. And then if you jump in after, you send an update out or haven't got to fully experience it yet, we've automated extending the trial process. So you can always jump back in after the trial ends and extend it, because we don't want to start charging until there's value in the product.
Yeah, that's interesting. I imagine just because of the company age and the price points, you don't have significant expansion revenue yet at this point, correct?
Yeah, it's pretty small as of right now, but we're starting to see a lift in that. So we just revamped pricing where we kind of have logical jumps. Before it was kind of just testing different price points. Now we have some, at least 2 plans to pick from. So we're starting to see a little bit of expansion with plans to, start figuring out more because kind of net negative revenue churn as well.
Yeah, or net revenue retention above 100% even.
Yep.
Yeah. No, it's always interesting when I go to a pricing page and I see the delta between 2 plans is like marginally small, which I would say yours is. It very rarely do you see expansion, but once you see a plan that's like, $30 a month, or one that's, call for custom pricing, there's probably an expansion machine built in there.
Yeah, I would say we're probably like 3 months away from having that nailed down the product side. I think we have a pretty good idea in terms of where we want to go. Just as you know, kind of building that in the roadmap.
Yeah. So let me put a hypothetical question to you right now. If you wanted to invent a plan where you could charge $3,000 a month to companies, what would it include? Yeah,
I think what we've heard is, let me take that experience of investor updates, investor communication, and put that on essentially my own domain, or brand it myself. So right now we do a lot in terms of, you're signing into Visible, you're pushing updates out. If you can remove that branding, obviously, but even can I create an experience in my own domain for my investors to log into? And then even take it a step further, we're starting to go down this path of nurturing investors. So how do I acquire new investors? How do I nurture them properly? Because the one thing that we see is our customers kind of start and stop fundraising processes. But as we both know, fundraising's 24/7, 365. But most CEOs and founders don't have time to properly nurture an investor like they would a sales lead. So building tools around, top of funnel in terms of your investor relationships is where we're going to be spending a lot of time in our product. I would say very much of our focus to date has been around that customer success. Like, how do I retain and engage my investors? And then figuring out from here, like, all right, how do I activate them? And then at the top of the funnel, like, how do I find new investors and nurture them?
Got it. Mike, by the way, did you just come out of Scott's program in Indy, High Alpha?
Yes. So we were a company that was started prior to High Alpha. So I started Visible with two partners there, Christian Anderson and Mike Fitzgerald, who then joined at High Alpha. And so we were kind of like the prototype or MVP for what High Alpha is today.
That's really interesting. So that program, I know a bunch of the investors in that program, and they always say amazing things about it. Would you agree? I mean, is that a great kind of channel to go through if you're a new entrepreneur?
Yeah, I can't say enough great things about High Alpha, their team, the partners there. They're truly kind of pro-entrepreneur. So they're always, thinking with the entrepreneur first and foremost. And they really do kind of accelerate your time to market. Seeing some of these businesses launch now, you have a full resource of engineers, designers, marketers, investors, right? And so you're seeing companies launch in, weeks. So it's pretty cool to see what they've built. And I'm a huge fan and can't say enough good things about the team there.
That's great. Talk to me about how aggressive you're being right now in terms of customer acquisition costs. $150 a month. Are you spending 12 months of ACV to get the customer or less?
Yeah, that's something we're honestly figuring out right now. So our growth to date has more or less been organic. So either through organic search, through customer referrals, investor referrals. So we're starting to spend a little bit in terms of paid marketing, and we want to keep that number less than 12 months. But we actually don't right now. Our AdWords budget, to give you an example, was like $400 last month. So we're starting to ramp that spend up to 2,000 and figuring out where that is. But we just don't have great data in terms of what paid's going to get us so far.
Yeah. So maybe maximum though in a channel, you'd spend up to maybe $1,800 or 12 months of ACV to get that customer in the first place.
Yep.
You can do that if you've got confidence in your churn data and lifetime value, obviously. That's great. Any plans to raise additional capital in the near future?
Definitely. Am I allowed to disclose that or not? I don't know, but we definitely have plans to raise capital in the future. So
by the way, I think most founders would say, of course, we want to raise in the future. What I'm more interested in is how you think about raising, right? Like if you do raise, how much would you want to raise in terms of planning for runway and things like that?
Yeah, that's a good question. My skew is how can we maximize a dollar and not have to over dilute ourselves or raise too much capital. Million to two, nothing crazy, but just knowing how we've oriented the business, we can get a lot out of every dollar that's put in.
Yeah. In order to avoid dilution, would you ever consider venture debt?
Yeah, we're probably open to all different types of financing vehicles for the business.
Yeah. Did the folks at High Alpha, I know those are really smart guys and gals there. Did they have any kind of thoughts on venture debt? I know it's becoming pretty hot now.
Yeah, I don't know. I can't speak for them on that, and something I haven't spoken with them recently, so I don't want to speak for them in terms of like if they how hot or not they are on it.
Did you learn anything about venture debt from them? Is really what I'm asking.
I'm not. We ourselves previously have taken out just SaaS recurring revenue loan. So we've used Lighter Capital.
Oh yeah.
So we use them to finance the business. I mean that was incredibly easy as well and worked really well. So I can't say enough good things about, working with that team too.
Was it fairly quick in terms of when you started engaging with them to when they actually put money in your account?
Yeah, we did a podcast with them. It was like 15 days from the start to the end. And it was cool. We did a podcast in series with them because we essentially just turned over our Visible profile to the Lighter Capital team and they had everything they needed. And we did it from start to wire, it was like 15 days.
That's amazing. All right, Mike, let's wrap up here with the famous five. Number one, what's your favorite business book?
Favorite business book? Hard Things About Hard Things. That's probably what everyone says, but I love that book.
Number two, is there a CEO you're following or studying right now?
There is not.
That's okay.
Actually, there is. There is. His name is Max Yoder. He's a great friend of mine. Company in Indianapolis, also out of High Alpha called Lessonly. And what he's doing is absolutely incredible. Check him out.
Yeah, no, that he was on the show back 3 months ago. So folks can go check that one out.
So he's been on the show.
Yeah. I've had a lot of people from Indy on. It's actually something's happening there on the water. There's a groundswell happening.
It is, yes.
Yeah. Number three, what billing tool do you use?
Billing tool, Stripe.
Okay, only Stripe. Do you lay anything on top of it for analytics like ChartMogul, Chargeify, anything like that?
ChartMogul, and they're a partner of ours. So we have a direct integration with ChartMogul in our application too. So our customers can pull in their ChartMogul data and then use that to report it back to investors and mash it up with other data sources.
Oh, great. Okay, number 4. How many hours of sleep do you get every night?
8.
And what's your situation? Married, single, kids?
Married.
No kids?
No kids.
All right. And how old are you?
30.
30. Last question. What do you wish your 20-year-old self knew?
It's going to be a grind.
Guys, it's a grind. Coming from Visible VC helps you get more accurate updates up to your investors quickly and more efficiently. Founded in 2014, spun out of kind of an investment firm. Now about 1.1 million bucks raised, serving about 600 customers, paying about 150 bucks per month. So just past $1 million in terms of run rate, growing about 200% year over year. Healthy economics, less than 2.5% revenue churn per year. Just now experimenting with paid spend. Obviously won't go over a 12-month payback period. Team of 5 in Chicago and other remote locations. Mike, thanks for taking us to the top.
Thanks, Nathan. Have a good one.